Well, hello everyone. Cynthia Tomain with Interactive Brokers, and thank you for joining today's webinar being brought to us by Leverage Shares. We're very pleased to have with us today Oktay Kavrak, who is in institutional sales with Leverage Shares. So with that, let me go ahead and pass the controls over to Oktay. If you can go ahead and share your desktop, let's get underway here this afternoon. Thanks for joining us.
Okay, thanks for the warm introduction, Cynthia. And hello, everyone. Thanks for joining me for today's webinar. So as Cynthia mentioned, my name is Oktay Kavrak, and I am an institutional sales associate here at Leverage Shares. Today, we're going to be speaking about single stock ETPs and how exactly they work. So the easiest way to understand these products is to simply think of them as providing magnified exposure to individual stocks. And as we move throughout the presentation, you will see that we have products that offer both leveraged exposure to the long side and also inverse exposure to the short side. And these are all to some of the most heavily traded and most talked about US stocks. But before I go into too much detail, I just want to clarify a few terms. So when we say ETP, we're actually referring to exchange traded products. So these trade just like any other stock or ETF on a regulated exchange. And in our case, they trade on the London Stock Exchange. When using the word leverage, we mean magnified or geared exposure. So they're used for profiting when the underlying stock increases. And when we use the term inverse, what we're referring to is short exposures, which means that investors are going to look to profit when a particular stock price drops. And we're very happy to share that all of our Leverage Shares ETPs trade commission-free right here on Interactive Brokers. But before starting, I just want to go over some disclosures because no presentation would be complete without them. First off, we recommend that all potential traders and investors review our prospectus and focus particularly on the risk disclosures. These products are meant for sophisticated investors who are aware not only of compounding, but also its effects, because holding for more than one day could produce some returns that are different than what an investor might expect. So they're meant for short-term holding periods and should be monitored on a daily basis. And because here we're talking about concentrated investments in single equities, investors should be aware of the company's specific risks. And just like with all investments, trading leveraged ETPs involve risk. Okay, moving on. First, let me just give you an outline of how the presentation will flow today. So first, we're going to speak a bit about the global ETP landscape. Then we're going to move into some of the main characteristics of leveraged ETPs. We will then wrap up the presentation with some hypothetical scenarios and an actual example, just to show you the products in action. So let's go ahead and get started. Made up of almost 900 ETPs, which also include ETFs, the global short and leveraged ETP space currently has close to $90 billion in assets under management. And this is roughly 1.5% to 2% of the overall ETP industry. As we can see from the chart on the left-hand side, investments in short and leveraged ETPs have been steadily growing from around 44 billion in 2012. And by far, as you can see, the most popular leverage factors are 3x, 2x, and -1x. So if you turn your attention to the pie chart on the right-hand side, we can see that the lion's share of the assets under management that we mentioned in terms of asset class belong to equities. The equity ETPs until now have mainly offered exposure to broad-based indices like the S&P 500 or the NASDAQ 100, or even certain sectors like financials or healthcare. So here at Leverage Shares, what we've done is we've slightly tweaked that by taking a similar approach, but applying it to individual equities. So moving on, here I just want to share some information about us, Leverage Shares, as a company. So Leverage Shares was initially launched in 2017 with a simple idea: to find a hassle-free way to make sophisticated strategies like trading with leverage and going short available to informed investors. And that's how the idea for single stock ETPs was born. So these products trade just like any other stock, and they aim to multiply the daily returns of the stocks that they're tracking. So currently, Leverage Shares ETPs track some of the most heavily traded stocks in the world. So we're talking about Apple, we're talking about Amazon, Tesla, Facebook, and many others. In total, we have 40 ETPs that are based on US stocks and trade on the London Stock Exchange. So when talking about single stock ETPs, we need to mention some of the distinguishing characteristics of what Leverage Shares offers. So here on this slide, I want to focus on the main 6. The first one is no counterparty risk. So existing inverse and leveraged ETPs, they typically use derivatives, mostly in the form of swaps, to achieve their leverage. But what this does is it introduces a level of unwelcome credit risk to the bank counterparties through which they enter the swap contracts. And this is something that no investor needs. So Leverage Shares does away with this counterparty risk because all of the ETPs that we issue are fully backed by the underlying stocks. In the case of the inverse ETPs, holding cash as collateral. But we don't have to pay much attention to this now, as we're going to go into a bit more detail as the presentation goes on. Next off, I wanted to mention that losses are capped to the amount invested. So just like a normal stock, the lowest an ETP's price can drop to is 0. That's it. While investors should always invest amounts they're comfortable risking, they don't have to worry about such scenarios like the ones we saw play out in the oil futures market earlier this year. Next in line, we have SIP, ISA, and UCITS eligibility. Of course, this topic is going to be most interesting for our UK-based viewers, but essentially, the ETP wrapper means that these products can be held in a self-invested pension plan or an individual savings account. And just to add to this, although the ETPs themselves are not UCITS compliant, they can be UCITS eligible. And in essence, what this means is that they're capable of being an eligible investment for another otherwise UCITS fund. And one of the main reasons for this is due to the lack of diversified underlying holdings. And next in line, we have low fees. So compared to other means of getting access to leverage, a lot of people might find that the pricing is a lot more competitive than the alternatives. The fees in our ETPs comprise of just a total expense ratio of 75 basis points plus market standard margin rates. And these are all reflected into the price of the ETPs. Our ability to access margin borrowing at institutional rates is what allows us to offer all the ETPs at this competitive rate. Some may think that the fees are, slightly more expensive than with average ETFs, but what investors should keep in mind is that they're not comparable with pure beta ETFs because we're talking about concentrated exposures. We're talking about leveraged products. Next in line, we have liquidity. So one concern that many people have, especially regarding new products, is regarding the topic of liquidity. And one of the major misconceptions about ETPs and ETFs in general are that investors assume that key indicators like either average daily volume or assets under management tell you all you need to know. But the truth is, investors are much better off checking the liquidity of the actual underlying stocks. Because these are open-ended products, liquidity comes primarily from the underlying security. And secondarily, it comes from the market where the actual ETP trades, which is also known as the secondary market. So just to reiterate, Leverage Shares ETPs are based on some of the most heavily traded, headline-making stocks worldwide. So liquidity essentially is not an issue. And just one other thing to add to this, we have an agreement with BNP Paribas, who's our dedicated market maker, in order to provide continuous bid-ask spreads on all of our products. So regardless of trading volume or assets under management, investors will always be able to enter and get out of positions, and all of this at very tight spreads. And last but not least, multi-currency trading. And because as we already know, a lot of investors just don't want to exchange the deposited cash in their brokerage accounts into other currencies. Well, they don't have to. All of our ETPs are available for trading on the LSE in US dollars, in sterling, and also in euros. Okay, moving on. Now let's take a look at an example of how a long leveraged ETP works. In this case, we're going to be looking at a 2x product. These are designed to mimic the daily returns of the underlying stock. So taking a look at the chart, we can see that as the underlying increases by 3% on day one, the ETP tracking it is going to rise by twice that amount, which is 6%. We then see the same scenario play out on days 2 and 3, where each day's return is multiplied by the leverage factor, which in this case is 2x. At the end of every single trading day, the ETP holdings are then rebalanced so that a constant leverage factor can be offered the next day. So some of you might be wondering, when would someone consider using either a 2x or 3x leveraged ETP? Well, the simple answer is when you think that the underlying stock will move higher in the short term. So as you can see, pretty straightforward. Now let me give you another example, this time with a short -1x product. So we're going to look at essentially how the short exposures work, also known as inverse exposures. Once again, looking on day one, we see that when the underlying falls 3% this time around, the holder of the ETP could actually expect to make 3%. Then on day two, we see that the underlying gains 2%, which would mean that the ETP holder then loses 2%. So it would be the exact opposite of what the underlying is doing. Essentially, we can see that the same concept once again applies on day three. The underlying moves down 4%, and we see that our product moves up 4%. So when would you consider using a -1x inverse ETP? Well, when you think that the underlying stock is going to decrease in the short term. However, one other thing that I should add here is that these examples do not reflect the fees that are incorporated into the ETP's price. So these could also slightly impact their daily performance. So investors should also just keep that in mind. Moving on, as we already know, there are multiple ways through which investors can trade with leverage. So I just want to now go over how leveraged ETPs compare, even contrast with some of the alternatives on the market. So here we're going to see how they stack up against call options, against futures, against CFDs, also known as contracts for difference, and simply buying on margin. So the first and probably most significant distinction is that you do not need a margin account to trade Leverage Shares ETPs. And of course, this also means that you don't need to worry about getting that dreaded margin call or worrying about margin maintenance. So these products trade through a normal brokerage or share dealing account as just the same way as any other stock or ETF. And from the chart, all the different product types are traded on a regulated exchange, except for CFDs. The counterparty in their case is the broker itself. And once again, our ETPs, as I've mentioned earlier, they trade on the main market of the LSE, where a dedicated market maker is making quotes throughout the trading day. And one other thing that I should add here is that we've seen some strange things this year. And one of them was in the oil futures market, where we saw an oil futures contract actually dip below zero. And the same actually goes with buying on margin. After incorporating costs and fees, an investor could actually end up in the red with those as well. But with Leverage Shares ETPs, the maximum an investor can lose is the amount invested. And one other thing to add here is that derivatives like swaps are not used in any of our ETPs. And all the products are physically backed with the underlying assets. And what this does is it protects investors from counterparty risk. While with CFDs, if the broker, who is the counterparty, goes under, then investors have very limited protection. Okay, so hopefully that clarifies some of the differences between these products. Okay, so at this point, some of you might be wondering, where exactly does the leverage come from? Well, to be honest, it's actually quite simple. All of the proceeds from issuing the exchange-traded products are invested in the underlying securities. Then a matching margin loan is also used to invest in the underlyings. And by doing this, leverage shares can make sure that all the ETPs are fully backed with the actual stocks that they track. So this is in the case of the long leverage products. When we're talking about the inverse products, Once again, the proceeds from the issuance are invested in the underlying stocks. But in addition to that, stock borrowing is provided, and the borrowed stocks are then sold short, and the cash proceeds from this short selling are held as collateral. Once again, making all of the ETPs fully collateralized. And one other not insignificant detail I might add is that other income, which includes things like dividends from the underlying stocks, these are also reinvested to purchase more of the underlying stocks. And what this means essentially is that dividends will not be paid out to the holders of the ETPs. But traders and investors should keep in mind that this is part of what leverage shares, this is part of what allows leverage shares to access a margin loan at institutional rates and offer the products that offer these leverage at such competitive rates. So I hope that makes sense. Okay, moving on. This slide here might be one of the most important things to take away from today's presentation. And this is on the topic of compounding. And just remember this quote, the trend is your friend. For these examples, we're going to be considering a 2x leveraged ETP. But you should all keep in mind that the same concept essentially applies to other leverage factors as well. So it applies to the 3x and it also applies to the -1x. So to start off, let's have a look at table number 1. Here, we're making the assumption that the underlying stock gains 5% every single day, which would mean that our 2x ETP will be making 10% gains every single day. The product in the middle is just a hypothetical one that doesn't have daily compounding, and it's there just to highlight the difference between what happens to the underlying and the 2x leveraged ETP. So over the 10-day period, what we see is that the underlying makes a gain of 63% in total. So logically, we might expect that the 2x ETP should have gained twice that, or 126%. But look at how much the ETP actually gained, 159%. So why is that? Well, on every subsequent day, we are moving higher from an already high amount from the day before. So put another way, the gains are simply becoming more and more pronounced. So that's a simpler way of thinking of what's happening underneath the hood. Now going over to our second example in table number 2, we're going to look at a scenario that may likely work against the investor. So here, we're considering oscillating returns, otherwise known as a choppy market. So this is where things just seem to be going up and down with no visible direction. And in this scenario, we're making the assumption that the underlying is going to move up 5% on day 1, and it's going to move down 5% on day 2. And this pattern is just repeated over the 10-day period. So if we go ahead and fast forward to day 10, we see that the cumulative gain on the underlying is -1%. So we might think to ourselves, okay, I guess my 2x ETP just lost 2%. Not quite. Look at the actual result. It lost 5%. So the logic here is the following. Every gain comes after a loss, which means we're moving higher from a lower number from the day before. On the flip side, every loss is coming after a gain, meaning there is more to lose. So a 10% loss is more pronounced than a 10% gain. And there are a few things that actually make the situation worse. So the first is very volatile underlying stocks. Second is essentially a higher leverage ratio. And thirdly, the longer the holding period, the worse the tracking error between the underlying stock and the 2x ETP is expected to be. So I know what some of you are thinking, it might not seem very intuitive at first, then it might not make sense. So in case it doesn't sound very logical or you just don't feel comfortable with the material yet, feel free to have a second look at these figures because this presentation is going to be uploaded in the webinar section of Interactive Broker's site. And now I actually want to show one of our products in action. So we're looking at an actual example of the 1-year performance of the Amazon Inc. common stock and comparing it with that of our 2x Amazon ETP. So as we mentioned on the previous slide, we can see both of the scenarios in action. The area marked with volatile moves, this is the choppy market that I mentioned a few minutes earlier. We see that the 2x ETP in the beginning was outperforming the underlying stock. But look what happened when the volatility continued. It actually began to underperform. And as some of you may have guessed, yes, this was the period from about the beginning of February to somewhere around mid-April of 2020. But then let's have a look and notice what happened when the Amazon stock seemed to find its footing. The 2x ETP just took off. And we can see that the end result of the 2x ETP was much higher than what an uninformed investor could have expected. Because what we see is that it gained more than twice the underlying over the period we're looking at. However, it's worth mentioning here that past performance is not indicative of future gains. So this chart is just, it should be borne in your minds as just for informational purposes. Okay, one of the questions that some of you may have is, who might consider trading leveraged in short ETPs? So, as we mentioned in the beginning of the presentation, these can be traded by experienced investors through a normal brokerage account. No margin account is needed. So these are for people who have knowledge about leveraged products. They're for those who have not only a high tolerance for risk, but already some convictions and maybe some directional views on the underlying stocks. It's also for those that have a clear understanding of daily compounding and its effects. Okay, hope that made sense. And moving on, I just want to go over and summarize some of the key points that we've talked about today. So first, we started out with mentioning how single stock ETPs work. Then, I went into a bit about what distinguishes leverage shares ETPs from some of the alternatives. Then I made some reference to the effects of daily compounding, especially over longer holding periods. And then what we did on the last slide is we actually looked at the actual performance of one of our ETPs, which was a 2x Amazon ETP. With that said, here's a look at the full range of our current offerings. So as you can see, there's 40 in total at 3 different leverage points, 3x, 2x, and minus 1x. They offer investors not only an opportunity to capitalize on market movements, but they can do so in both directions, both to the upside using the 2x and 3x, but also to the minus 1x. Okay, as this is the final slide, I just want to remind everyone here that all of our ETPs can be traded commission-free right here on Interactive Brokers. And with that, I'll be wrapping up today's presentation. I hope I was able to clarify some cloudy topics that you may have maybe wondered about, and I'd be glad to answer any questions at this time. And you can do this either the chat that you see on your screen, or you can just email us directly at info@leverageshares.com. And one other alternative is to just leave us your contact info in case you just prefer that we call you. Okay, thank you very much. And let me just see what types of questions we have now. Okay, so question number 1, do the ETPs pay dividends? Great question. The answer is they do not. The dividends, like I mentioned in the beginning of the presentation, are received on the underlyings. The dividends that are received on the underlyings are actually reinvested in order to purchase more shares of the underlying stocks. So, that helps fully collateralize all of the ETPs and make sure that they're fully backed with the actual stocks. Okay, here I see a second question about the difference between an ETP and ETF. Another great question. Well, one thing that everyone should keep in mind before even considering investing in these products is that the term ETP, this is a broad term. And what it does is it encompasses ETFs as well. And not just ETFs, it also encompasses the term exchange traded commodities, also known as ETCs, and also ETNs. So what ETPs seek to provide is, just some sort of return based on the price movements of an underlying asset. So this can be a benchmark, it can be an asset, it can be a commodity, it can be an individual stock. And ETPs, just to differentiate, they are not funds, so they cannot be classified as ETFs. And this is partly due to the fact that there's a lack of diversified underlyings. Okay, and I also see that we have some questions here about some examples of the ETP tickers. Okay, great question. I think after the presentation, we can actually show you a link both on our website and on the website of Interactive Brokers, where you can see the tickers for all of our products. So you will see the ISIN and the tickers for each one of them.
Okay, since that question just came up, what I did do is I just grabbed the control so that I can show folks where they'll be able to access all of the leverage share products. Now, I am working from the Interactive Brokers UK website, and you can go underneath the trading menu to find exchange listings. Now, on here, you'll find with the exchange listings, simply clicking through this button will bring you to all of the available exchanges. And if you do take a look at the let me see, I'm going to go to the LSE where you can find leverage shares. Now, notice here, I'm also going to put this very same link into the control panel right now. So if you do want to access this information, simply copy that link down. Now you'll find that on this page here, we give you general information as well as access to both the prospectus and the fact sheet for each of the products that are listed here. So you'll find all of these listings will be included. So notice here we do have the available ticker symbols, the currency it trades in, as well as the product description, prospectus, and fact sheet. So I've just added this very same link into the or sent that via the questions panel, so you can copy that and access that after today's session. So wanted to mention that. So Oktay, back over to you.
Perfect. Thanks for that, Cynthia. Awesome. So now everyone knows where they can see all of the tickers. Okay. Another question that we just received is, are all your ETPs rebalanced daily? And this is a simple answer. It's yes. They're, they aim to provide 2 times or 3 times or -1 times the daily returns of the underlying stock. What this means is that we do have to rebalance them on a daily basis. Okay, and another question I see here is, would you invest in ETPs for the long term? Okay, great question. This essentially applies to all leverage products in general. So they're made for short-term holding periods, and the actual recommended holding period for our products is actually 1 day. But if you saw the chart that I showed with the 2x Amazon ETP, you can actually see that over the long term, it did perform quite handsomely. So of course, anyone can hold them for as long as they want to. You don't receive margin calls, or they're not going to expire within a few years or something like that. So you can indeed hold them for the long term. But once again, the recommended holding period is short term. Okay. And another question that we received here is, what is the margin impact versus buying the actual underlying stock? Well, a lot of people who actually trade on margin or other leverage products, they might see that our products are a much more cost-effective alternative to actually buying on margin. So of course, every broker has their own margin rates, has their own costs and fees. So these are things that should be analyzed separately. But what we've seen is that a lot of them are just much more costly and simply just not as effective. Okay, and let's see, one other question that I got here is, who is the margin loan provider for Leverage Shares ETPs? Okay, great question. It's Interactive Brokers. So simple answer there. Okay, next one up. Can I use a stop loss with these ETPs? The answer is yes. So the same way you would with any other stock or ETF, you can indeed use stop losses. Okay. Are there overnight fees like with CFDs? Okay, yes. One of the things that I did not mention about CFDs is that indeed they do come with overnight fees. But yeah, another beneficial point about our ETPs, no, there are no overnight fees to be paid on these ETPs. So like I mentioned, it's just a management fee, which is 75 basis points, and the market standard margin rate. Once again, all of the fees are just incorporated into the ETP's price, so they are reflecting all of them already. Okay, and I actually see here another question, which is, why do you only offer some ETPs as 3x and not all of them? Okay, good question, good question. Well, what we saw, especially since the beginning of the year, is that much more people were interested, in taking advantage of the upside of US stocks in general. I mean, we're talking mainly about tech stocks, which just seem to skyrocket following the trough of the pandemic. But we're not limited to not offering other leverage factors in the future. But for now, we do feel that there is more interest to the upside in offering more leverage and just offering a -1x inverse exposure for those that they want to go short, but they don't want that huge leverage factor to the downside. Okay, hopefully that's able to answer that question. Next up, we have, what are the trading quantity multiples for ETPs, and can you trade one share? Yes, in fact, you can trade just one share. So you don't have to buy lots of 10 or 100 ETPs. You can just buy a simple ETP and hold it for the recommended holding period, or for as long as you see fit within your portfolio. Okay, another similar question I see here is, what is the maximum leverage and why not more? Okay, for now it is 3x. That's the maximum leverage factor that we currently offer, and there are a few reasons for this. One of them is the physical replication that we talked about earlier. In our products, we're not using any swaps, we're not using any derivatives, so we want to make sure that we have enough of the underlying stock to collateralize all of our ETPs, because any leverage factor above 3x makes this more difficult. And also, the thing that we mentioned on regarding the possible downfalls of compounding, or what's also known as beta decay, is that when you have more volatility and higher leverage factors, the compounding effect to the downside becomes worse. So that's why we feel that 3x is a good maximum leverage factor to offer for now. Okay, here we have a question about, how is currency risk reflected in the price of the product? Great question. So like I mentioned, we do have the ETPs, and every single ETP comes with 3 different tickers in US dollars, in euros, and in British sterling. And what this means is that when you buy any of the GBP denominated or euro denominated products, there is some currency risk inherent in those products. So this will reflect any of the given currency rates on that particular day. So yes, there is currency risk when you buy any of the ETPs that are not denominated in US dollars. So essentially, if the particular ticker that you bought in another currency, if that currency were to go down, of course, it would have a negative impact on your holding. Okay, one other question that I see here is, just widen this window. Okay, would you use the same currency as the underlying, or would you use your home currency? I guess this is sort of tied to the last question, but yeah, it's very beneficial to know indeed. I would say that this depends on the individual investor himself or herself, because some people, of course, in interactive brokers, you can of course trade products in any currency, but there are other brokers that actually restrict their investors from buying products that are denominated in another currency. So if you feel that maybe the British pound is actually gonna gain on the US dollar, then for you personally, it might make more sense to buy the GBP denominated product. But of course, here we cannot give any advice on what currency whether another currency other than the US dollar would be more beneficial than to buy the USD denominated product, because of course these changes, some days one could perform better than the other, and so on and so forth. Okay, and the last question I see here is that, can we see the graphs on your platform as in the page 6 of the presentation? On our website, actually, oh no, we don't have a view of my screen, but on our website, you can see the best daily performers in graphical form every single day. So if you were to go to leverage shares.com, you would see the top 4 performers for that day. We don't currently have, a picture of this graph that I shared on our website, but we would be more than happy to share more examples of maybe other products and how they've performed versus the underlying, and maybe send that over to you personally. So in case you would like that, just feel free to drop us an email or leave us your contacts, and we'd be more than happy to share more examples with you, including the one that I included in the presentation. Okay, and I see that I have another question here, and it's regarding building long-short strategies with these ETPs and whether that's possible. Okay, yes, the simple answer, once again, is yes. So these are meant for those that already have some sort of conviction on the underlying stocks. Of course, they can be used in multiple fashions. So when we're talking about trading strategies, yeah, market neutral strategies are feasible. You can do a pairs trade using one of the shorts and a long leveraged one. You can use the -1x product to hedge existing exposures, or you can try and just take advantage of some event-driven price moves, things like some news releases or an earnings release. So the investor can essentially use the long leverage products to express conviction, and the inverse ones if they think that the underlying stock isn't expected to perform well in the upcoming future. And yeah, these are just a few things that I wanted to mention, but as you can see, the list just goes on and on. It depends on the particular investor. Okay, and I think that about wraps it up in terms of questions. I do not see any more. So yeah, once again, if you do have any more questions, feel free to drop us an email. Feel free to check the frequently asked questions section of our website. And yeah, you can reach out at any time in case anything is still unclear.
Well, okay, thank you very much for today's presentation. And I want to thank everyone for joining us here today. That is going to conclude our webinar. But before you do exit today's session, I do want to point out over on the right-hand side of your screen, if you do want a copy of today's slides, they're available in the handouts pane, and you can download directly from here. By the way, we have been recording today's event, and each of you will get a direct link to today's recorded playback if you want to go back and review the concepts that were discussed here this afternoon. By the way, I'll also be including with that, with the follow-up report, not only today's slides, but also that link to the products that's available from the Interactive Brokers website. So with that, I want to thank Leverage Shares as well as Oktay for today's presentation. You can all exit the event using the X in the upper right-hand corner of your screen. Have a great day, everyone, and thanks for participating here this afternoon.